Hi, this is Dave and welcome to the weekly market recap closing out the week for Friday, February the 1st, 2013. So January's gone and February is here. I'm recording this video on Saturday, February the 2nd, and let's take a look at this week's weekly close. In last week's video, first off, we're starting off with the Dow futures on the daily chart as we usually do. In last week's video, we were talking about looking for a significant pullback to somewhere around the breakout point. But what we've really had here was we've had a really strong grindy market to the high side. And personally, these are the hardest markets for me to trade because I'm always waiting for, this kind of a pullback like we had back here, at the end of December. That kind of a pullback. But what we've had is we've just had a breakout. We had the retest of the breakout here. But that wasn't really much of a retest or a pullback. And then we've just been grinding to new highs, to new intermediate highs, for the last, since we broke out over here, what is that, 2 weeks ago? So this has been a really tough market to trade. If you look at the pullback scenario using, like, for example, fast stochastics, which is this dark blue line here, you had a statistically oversold situation, which would denote a significant pullback. If you notice over here, statistically, you had the same sort of scenario where, the indicator pulled below the 20 mark, punched below the 20 mark and then pushed back up, in this kind of scenario. Well, and you had a significant pullback here, but you can see over here on Thursday, you had that same situation happen where you pulled back below the 20 and then you pushed off, but it really only equated to a pullback to the 8-period exponential moving average support. So it was only really an 8 EMA pullback. That's a really shallow pullback. So at this point in time, I'm looking at this market from a number of perspectives. So from a technical perspective, this is sort of how I'm looking at this market. So let's just recap this. Let's take a look at it. So here's the Dow futures. So I'm looking at, for example, this area, this high, this low, and I want to see where the fibs come in off of these highs and lows for an extension. So this high, this low, and the reason I like to look at this is because this to me looks like a cup pattern, right? So here's your here is your cup. You didn't really have a handle form. This is just really a cup breakout kind of pattern. So if I look at this high and this low, let's see where that comes out. We're at the 1272 extension of this breakout above, the high here, and the 1618 comes in at, let's see, 14,272. So I'm looking at the market from that perspective that we could potentially, I'm looking at that as a potential target as to where the Dow futures could go. But having said that, what I'd like to do is look at a little bit of a cleaner chart. And what I mean by a cleaner chart is I want to see where the historical highs were because we're not really getting any decent pullbacks to levels that I'd really want to buy. So let's take a look at another chart. Let's look at the ticker symbol INDU. Okay. So the INDU is the Dow averages. Now, if we look at this chart, it's very much the same chart because the Dow futures really track. There's a number of ways to chart the Dow. If you look at this, the diamonds, the DIA ETF, which is tradable, that tracks where the Dow is going as well. So there's the DIA, which is a tradable instrument. And let's just flip back to the INDU, $INDU. And the reason why I want to do this is because if you go back in time, now I'm going to change this to a weekly chart just to get some perspective here. So let's see, format, symbol. Let's go to a weekly chart and let's go back 10 years. Okay. So if we go back 10 years here, what we can see is, let me just zoom out. And what we can see here is you've got a level in here going back to, let's see, that would, I guess, be 2007. And if I turn off background dragging It will actually give me a date. So this is, let's see, the 10th month. That would be October the 12th, 2007. Okay, October the 12th, 2007. Right in here, what you can see is we're coming back up and retesting those highs. So looking at the weekly chart gives you a little bit more perspective. And when we look at the weekly chart, what we can see is that this area, we're so close to this area here, that this area here is just like a magnet. Okay, that's a poor drawing of a magnet. But this area here is just like a magnet. And I think what the market is set to do is, you know, it's kind of saying like, look, guys, we're so close to this level, guys and gals. We just really need to come up and test that. So we haven't had a real significant pullback. And what seems to be happening is we're just kind of coming up and testing that level. So if I just clear off the chart here and let's draw a line there, a resistance level, horizontal kind of line. I just want to actually get this exact level. So the high, 14,198.10, okay? 14,198.10. So there was the high going back to November the 12th, 2007. So what it looks like we're doing is we're just going to come back and we're just going to tag that level. That's, to me, that's the only thing that I can really think that the market is really set to do. So right now we are at, in the INDU, okay, in the Dow Industrial Average, we are at 14,009, okay, call it 14,010, okay, just to round it off. So we have roughly, you know, if this kind of logic follows through, we have roughly 190 Dow points of potential upside here where we may just grind higher right into these highs. So that's kind of what I'm looking at for now. We haven't really had a significant pullback, so I'm just really looking at that as a potential magnet area that the market is saying, look, we just need to come and test that area. Now from there, I don't know if we're going to, you know, go sideways, at that level, if we're going to pop through it and, you know, hit some stops, or if we're going to sell off hard from that level. But that seems to be the level that the market wants to, you know, revisit, you know, from 2007. So that's really all I have for the Dow. You can see here that we are in a clear uptrend, and I think this is the chart that really kind of says it all. Oops. You know, we're in a clear uptrend. We're really extended from the 20-period moving average. We're really extended from any significant trend lines. So I think that's really what's in play. Now, if you look at that and you try to see where levels might come together, okay, because I like, you know, when I trade or when I look at charts, I like to look for confluence areas. So on the weekly chart, let me just kind of zoom in here. Let's take a look at this cup pattern again from this sort of perspective and see if we have any overlap. So, and then let me zoom in. Okay, so if you look at where those highs are, they are right in the middle of this 1272 extension and this 1618 extension. So statistically, the 1618 extension is, you know, the hard target, you know, from a fib perspective. Let me just kind of tighten this up a little bit. Yeah, so you can see that that comes in at the, you know, just below the 1618. So I do think that is an achievable level that the market is, you know, kind of gunning for. So let me just save this. This is a significant chart that we will revisit, you know, going back or going forward rather into next week's video. So let me just change this back to a daily chart. Format symbol, daily chart, and let's go 5 years back. Okay, so now if we just kind of look at the sister indices, let's jump over to the S&P futures. Okay, so the S&P futures, they're sort of the same story. Let's see where they are in relation to their, fibs. Yeah, so they're, you know, just above the 1272. The 1618 comes in, you know, just above 1500, 1536. And if we look at the NASDAQ futures, they are holding As we mentioned, they're in the last video or the video before, they're holding their 618. They're not nearly as strong, probably because of Apple, selling off, but they're not nearly as strong as the S&P or the Dow future. So you've got a long way to go, but they are holding the fib line in the sand between long and short above the 618, which comes in at 27.22. And if we look at the transports. Let's take a look at the transports this week. So the transports this week really, they've really hit this. They've really been, strong. So what I want to look at is actually a symmetry move. I want to look at a symmetry move between, the width of this box, basically treating this like a box play. So because we were in this box consolidation for a really long time, so I'm treating this as kind of a Darvis squeeze type of setup from, this low, this high, from the breakout point, seeing where, so you can see, wow, we hit 100% of that move. And as you would expect, we found resistance right at the top of that move and we pulled back, at least down to the immediate support. So what I'm looking at for the transports here is to see, are we going to put in a double top here at this, 58.8175 level? Which is, a measured move or a symmetry move off of the width of that box, or are we going to, punch through that level there? So are we going to put a double top in there and pull back, or are we going to, just punch through that level there? There's the logical resistance. And if we take a look at this same chart from the Darvis squeeze perspective, we broke above the high of that Darvis box there, which is the, sort of the measured move of the width of this box, projected on a one-to-one basis higher. I hope that makes sense. This signal is still in play, but this is, we're 1, 2, 3, 4, 5 weeks into the signal. We're a little bit long into the signal. You would normally expect some type of a pullback, at the high of that target in a normal market. And I stress the word in a normal market, but you can see here, this is a bullish hammer, kind of pushing off, being accumulated all the way to the highs on this weekly chart. So not really quite sure what's going to happen there, but on the daily chart, you can see where the logical resistance is, and it'll be interesting to see if we do put in a double top there right at those highs. So I'm just going to mark this level so that we can revisit this going forward as well into next week. And if you look at, the Darvis squeeze on the weekly chart from the Dow perspective, you've got a target potentially of 14,709 in the Dow futures, with no significant pullback yet. And we're still pretty early into this signal, 3-4 weeks into it. And if we look at the S&P here, if we look at the S&P here on the weekly chart, you've got a potential target of 1592.50. So with no significant real pullback either. So this is really interesting. We have the potential to go higher. I personally am having trouble getting on this move because I'd like to see a significant pullback before we go higher. And that being said, these are always the hardest markets for me to trade personally, and I sometimes miss these moves, and I'm okay with that. Okay, because I'm looking really for the lower risk entry, which is typically a pullback situation. So since we're on the Darvis squeeze charts, let's take a look at some other instruments. Let's look at the 10-year. Let's look at some of the notes and the bonds. So this is really interesting, and me and the guys have been talking about this in the room to see where the major moves that are setting up. And one of the things that we've really been focused on is the notes and the bonds. So this is the 10-year note. Sorry, just taking a sip of my coffee there. Here's the 10-year, and it just fired on the weekly chart a short signal with a potential target much lower. So that's really interesting. You've got, the trending indicator. My trending indicator is still net bullish, but you're in an elongated squeeze here. You've got red Hakanashis, and you've got the MACD coming around to test, this zero line down here. So this is really something we're keeping an eye on here. This situation, is this going to go negative? This is something we're keeping our eye on. But having said that, I think the more significant we're really looking for confluence, but the more significant chart is the 30-year, the long term, and this fired a Darvish squeeze short, as you can see here on the weekly chart, and this squeeze just fired. And this is really significant here because we were talking about, you know, this signal firing going back 4 weeks ago. We had a pullback, or a retracement rather, into resistance now. And now the main thing here is, this is really significant because we had a signal fire here, you know, and we had, you know, sort of these things coming into play here, but this had not, you know, turned yet to the negative side. Okay, but what we had was a break of long-term weekly support while we were in a squeeze. This is my Darvish squeeze setup, you know, that I've been working on for a long time here. We had a pullback, a retracement into logical resistance, the 8 EMA on the weekly chart. And then what we were talking about and what I really wanted to see was a retracement and then to come back down through this level and to break this level again. So this is kind of what we're looking at here, and you can see we're about halfway into the range or into that signal with a potential target lower. So what this means, and you can see a squeeze, short squeeze just fired off. So what this really means in English is that, you know, we're starting to see weakness and a breakdown in the long-term bonds. And what this could spell for the economy is potentially higher interest rates going forward. So, you know, the guys and I have been really talking about this a lot over the last couple of weeks in the in our live trading room here in Burlington at Market Trading Concepts. And, you know, this is something we're really keeping an eye on, and this could be, you know, the move of the decade. This could be a secular secular move. You know, for lack of a better description, this could be, you know, a kickoff of a long-term trend. So we're really watching this closely. Now, that being said, we've got some support levels coming in, you know, at some of these levels here in some of these Darvish boxes that will need to break, and we'll need to see how those resolve themselves going forward. Now, if you zoom out on this chart, what you can see is this sort of looks, you know, very toppy, and I'm just going to jump back over to, let's see. So the Darvish squeezes really gave us a macro direction sort of heads up as to where these markets could be going. Let me jump back to the more traditional charts, and oops, that's a 1-minute chart. Let's jump back to these more traditional charts, and let's look at this on a daily chart and see, you know, from a more traditional standpoint, these are really the levels that we're looking at. Now, if you look at this daily chart of the 30-year bond futures, the continuous contract, it is the in TradeStation. This is the, I'm charting the at US, okay, which is the 30-year. Now, what you can see here on the more traditional charts is you can see you've got a level of support in here, which really needs to be broken. And you can see we're just kind of hugging this level here. So this kind of line in the sand I'm looking at is sort of around 143 and 4/32, somewhere in there. And the significant thing is that we closed below that level this week. So we've got a target, potential target, looking at a number of scenarios here. You can see a down channel, and you can see some confluence on this chart at this 618 level of support. And that 618 level comes in right at, let me zoom the chart out. Okay. Now I'm treating this as major uptrend, pullback in the major uptrend. So this level comes in on this channel in this 618 level right at 141 and 7/32. So I believe that this is going to be a magnet and a potential support area, you know, for this potential setup. So if we fail this support decisively, I think this is going to be the logical area where the market is going to kind of look, you know, from a magnet perspective to come down. It's not a very good drawing, but to come down and test. So that's sort of what we're looking at there. I'm looking for some kind of a bounce there and then a breakthrough of that level eventually. So, you know, the guys and I in the room believe this is, you know, the potential of a long-term kickoff. But in order to really get something going to the downside, we need to break this support level here. And we really need to decisively break this fib support level here at the 618, coming in around 141 and 7/30 seconds. If we break that level there, then I'm really going to be concerned, not necessarily concerned, but I'm really going to be looking at the possibility of higher interest rates going forward. So that's sort of what we're looking at there in those markets. And now let's wrap up this video looking at some key currencies. So let's start off with the dollar index. So the dollar index is just hanging on to support here. You can see these valleys here, the 79 level just above 79.28. You can see we're just holding on, for dear life here, and we've got our stochastics buried, to the low side. I'd expect a little bit of a bounce off of these levels. You've got sort of a W pattern in there. A W pattern there. They usually resolve themselves with a bit of a bounce, at least, to 50% or something like that on the scale of, the stochastics. So, but this is really looking negative. The dollar index is really looking negative. So it'll be important to see if we can hold, some of these levels here. I'm just going to draw another support line in, and let's see, you can see those valleys there. They kind of come in around that level. Okay, so these are really key levels that we have to hold, and if we don't hold those levels, then you've got some levels down here around 76.63 that we potentially could test. So I'd personally hate to see the dollar index do that, but a chart is a chart is a chart. You've got this sort of descending triangle, I guess you would call it, where the lows are all the same level, and you've got higher lows in place there, or lower highs rather in place there. I guess you would classify that a descending triangle, and it looks pretty negative. So we'll just have to see, if we hold this 78.85 level. And let's look at the euro. So the euro is still net bullish. And in last week's video, we were looking at the resistance level of $1.3523, where we would expect logical resistance. You can see we powered through that decisively, $1.3523. And, we really just kept going. We had a doji day. We powered through the day before. We had a doji day, which is sort of a rest to pause. Some people look at a doji as a negative, kind of a negative reversal signal, but it's it can also be considered a rest to pause, which is what you see here. You see we had a doji day there where after one big day of activity, you had a doji where you close in the middle of the range of that Japanese candlestick pattern, and then you push off the next day. Here you saw a doji and it ended up being a short-term reversal, but I don't look at dojis as reversal candles. I look at them as a potential rest to pause, and then you can see where the market goes from there. It doesn't always reverse from there. Now the interesting thing to note here is you had a strong push off and you closed 50% off the highs of this candlestick. And, you had significant volume come in as well. And you can see your stochastics are net overbought. Overbought on both the short and the long stochastics. So when I look at that, this looks like a potential short-term reversal signal. At this point in time, I'd be looking at the high of this candle as resistance, and I'd be looking to see if we're going to pull back to logical support, at least to $1.3523 breakout, where the breakout level was, or, potentially some of these lower support levels, $1.3420, somewhere in and around there. And if I go back in time to see where the resistance areas are, you can see that, we sort of failed, or we found immediate resistance or intermediate resistance, back in this congestion area here, where you had a swing point here, you have a lot of congestion in the background, and then if I just kind of pull the chart forward, you can see that's sort of where we found, somewhere in this range here is where we found some immediate resistance. So $1.3683, $1.3720, there's that 20 level sort of coming in the currencies. Some people talk about the 80-20 rule. So you had that sort of breakout above $1.37. You hit almost the 20 level and then you sold off. So, somewhere in here you've got a range of a sort of a band of resistance. And, to me, it looks like, if I had to, sort of hazard a guess, I would think that we're going to have a short-term pullback in the euro and a short-term bounce in the dollar. That's kind of what I'm looking at. But that said, you really need to look for, confirmation on, what the chart's going to do and what's going to happen going forward. That's sort of what I'm looking at, just based on my experience of looking at charts. I'm looking at a potential support in the dollar index, a short-term bounce at least, and a short-term pullback in the euro. So I wouldn't personally want to get take a position either way, but that's sort of what I'd be looking at, looking at those charts. So that's all I have for this week. Just to recap, euro looks a little bit overbought, dollar index looks a little bit oversold. Looking for a potential pullback in the euro, a potential small bounce at least in the dollar index. The stock indices look a little bit overdone, but that said, you've got that magnet area in the Dow Industrials, at least at 14,198. You've got that level in there as a potential magnet that we could come up and tag, before the market decides if it wants to sell off or whatnot. You've got about, potentially 200 points of upside there in the Dow, potentially. The other markets, the bonds look really negative, and we looked at some potential levels where the bonds, the 30-year might be breaking down, and some potential levels that it might find support at. I didn't really cover the gold or any of the commodities because this video is getting kind of long, but for all intents and purposes, I'll wrap up this video now, and but I'll keep continuing it on, for those who are interested. So I'm just going to jump right into some other instruments. Let's take a look at the gold. So the gold here looks, we were looking at this potential support zone at this 618 from this high here to this low, and we found some support in there. We bounced nicely, going back into, I guess that would be Wednesday. And then we pulled all the way back in and we tested that 618 level. Those are some pretty big moves, volatility up and down. And then we kind of held that level and jumped around. So I'm looking at the gold here. I'm net bullish on gold. As long as the gold holds this low right in and around here. If the gold holds this low and we push off when we break this trend line, I'm net bullish on gold above this level here. Now, having said that, why don't I just mark that level? So I'm bullish on gold above, and the gold futures above 1652. Okay, a decisive close below 1652 would really change my mind. Let's look at the sister of gold. Let's look at the silver. Silver, same scenario. We held that 618, and it looks, to me, net bullish as long as we hold, $30 and let's call it $30.70 in the silver futures. If we hold $30.70, I'm net bullish. I'm looking for potentially a breakout above this swing point, which comes in right at, let's see, 30, right around 32.52, I guess. So I'm looking at this area, a potential break of that area for continuation higher and a potential retest of some of these higher levels. So I'm net bullish on silver as well, as long as we hold, this level. And the decision point would really be a break of, this level here, that I would want to look at, it pushing higher. Right now, all we really have is support, resistance, and potential sideways action until, we break one of what I consider these two decision point areas. So let's take a look at the crude oil and TradeStation at CL. So the crude oil broke out of this wedge pattern. It's just been grinding higher. I'm looking at from a fib perspective, from a pattern perspective, I like that it broke out of this wedge. Or this, I call it a wedge. I guess it's technically a symmetrical triangle, I guess is what it would be called technically. All of these patterns, to me, I call them wedges. So, so from this high to this low, maybe I should tighten this up a little bit. That high to that low, we're looking essentially of a retest of the 50% retracement. We've still got resistance, major resistance from a fib perspective at $101 a barrel. We've got, short-term resistance here. We're just going sideways. Do I think it could come up and peg this 61.8% level? Yeah, we've got a couple of things going here. We've got a bullish pattern breakout, but we have immediate resistance at the psychological $100 a barrel level. That's a key psychological level. And then you can see also you've got a lot of swing points, resistance levels coming in here, going back in time. So this is really this is going to be a strong level, I think, $101. That's going to be a real make or break level for oil. If we decisively close over and above $101, and I mean a decisive close, where we get at least a couple of bars, closing decisively above that level, then I think that's really the line in the sand between, whether we're going to, just continue going sideways or, really potentially make a move higher into maybe to retest $115, $110, $115 a barrel again. So that's really what I think is setting up in crude. We're at immediate resistance. We've got strong resistance above here. You can see these swing points come in right around those levels as well. Psychological $100 a barrel resistance and and technical resistance as well. So that's all I have in the crude oil. Is it actionable? I personally don't really think so because I don't see a good risk-reward trade, but that's kind of what I see. And then let's take a look at the natural gas. The natural gas is a funny instrument. It has really kind of crazy moves. And if I look at it, I think we're at, logical support. If you look at this extension from this low to this high, we pulled back and we held the 618, and it kind of looks a lot like gold from that perspective, where it broke this immediate downtrend line decisively. It found resistance from this high to this low, between the 50 and the 618% retracement of that move. And then if you look at the pullback from this low to this high, it found support, at the 618 of that move, and established what looks like a new trend line with a, if you look, I like to look at the angle of trend lines. So if you look at, this is a nice 45-degree angle of ascent. So I like that as a potential swing point and as a potential trend line going forward. You've got this spike low and this swing point, and they line up. So I like this as a potential trend line to hold this trend line and potentially push higher. But you really got to clear this 20 period or 21 period exponential moving average at around $3.40. So this looks a lot like silver and gold. It looks like it's potentially set to, potentially has, reverse trend in terms of, we were putting in lower highs, lower lows, lower high, lower low, and now we put in a higher high and potentially a higher low, and you've got, the makings of a trend change here. So I like that. This is the key support. I'd like to see it push off and potentially get above that swing point set to put in a higher high. So I like from a market structure perspective, I really like the commodities, the gold, the silver, the natural gas, how they're setting up. I think they're still in fairly low risk, high reward scenarios. I don't feel the same way about the crude oil because you've got that $101 a barrel resistance overhead. So I'm going to wrap up this video. This is all I have this week. This is a long video. I hope it's helpful and good trading, and we'll see you at an upcoming meetup or on February the 13th. If you check our meetup site, February the 13th, which I believe that is, don't get in trouble with your significant others, but I believe that is Valentine's Day, if I'm not mistaken, or you could bring them. We have an Oakville chapter CSTA meeting, and we're going to have Brooke Thackeray out. He's going to talk about his new book and how to interpret the book and how to set up seasonal plays. So let me just pause the video. I'll actually bring you over to the link there. Okay, I just paused the video there for a second. So if you come over to www.csta.org, it will bring you over to the Canadian Society of Technical Analysts. And for those that don't know, I've been running the Oakville chapter meetings, the monthly meetings for the Oakville chapter of the CSTA. Now the CSTA has a number of different chapters. You can see there's Montreal, Ottawa, Durham, Toronto. This is us, Oakville. Okay. This should actually technically probably be Burlington, Oakville. I'm in Burlington, but I do run the Oakville chapter group. And you've got, basically the major cities in Canada all have a chapter. So we have, over 500 members. We're an active group of technical analysts, people, market participants, people that are interested in learning more about technical analysis and chart reading, the markets. We do a whole bunch of really good stuff. In my opinion, that's why I did get involved with the group. We've been having really good meetings that have been averaging, between 30 and 50 people per meeting. And if you come over here to the CSTA.org, you can sign up. Here's the meeting for the 13th Oakville Chapter CSTA meeting. You can attend the first meeting for free. So you just click on that link, and then you can click over here on the register link. It gives you all the details, and once you register, it will send you all the directions and all the information you need to attend the meeting. A yearly membership is only something like $125, so it's really a no-brainer to join this group. It's really you get a lot of value. You get a lot of value for your money. The organization is a nonprofit. They're not out to milk you like some other trading sites might be that you've experienced, trying to take courses, et cetera, et cetera. This is really a group that is focused on, it's a nonprofit and it's focused on education and, your best interest in learning about technical analysis. That's another reason why I like this group and I decided to become more involved. So if you register for this and you're not a member, you can attend the first 1 or 2 meetings for free just to see if it's, it fits your profile, fits your goals. If you like the group, the members, we have a really good group of members. And you can see here for the next upcoming meeting, we have monthly meetings, second Wednesday of each month. And we've got guest speaker Brooke Thackeray from Alpha Mountain Investments. Geez, I can't even talk anymore. Brooke Thackeray from Alpha Mountain Investments. He'll be talking about his new book. The topic is how to invest and read the markets using seasonal analysis. And for those that don't know, Brooke is a partner of Don and John Valou. They kind of work together in their methodologies and their technical analysis. We've had Don out to a couple of our meetings. He's a great guy and very, very, very knowledgeable. Been involved in technical analysis for a long, long time. And you can catch a lot of these guys on BNN quite often. And so Brooke's going to be talking about his book, Thackeray's 2013 Investor's Guide. So this is going to be a really good meeting. I'm really looking forward to it, and I hope to see you all out there. And now I better wrap up this video before I turn this into a movie. So good trading, good investing, and we look forward to seeing you at an upcoming meeting or at the next video update. Goodbye and take care.